Now, next week, Monday and Tuesday, have been declared public holidays in Nigeria to mark the El-Kabir, and consumers are expected to do a lot of spending at this time. Meanwhile, reports say fast-moving consumer goods companies are contemplating price increases to stay afloat. Now, let's look at how the domestic consumer goods prices are doing ahead of this holiday. Let's bring in Ada Akonobi, Senior Investment Officer at Financial Derivatives Company here in Lagos. Good afternoon, Ada. Good to have you on the program. Now, it's going to be a long weekend because of the Eid al-Kabir celebration. How much changes have we seen this time around on consumer goods prices?
Well, the general trend is that most consumer food prices are increasing, especially those that have some sort of import content in them. However, we have a festive season coming up, which is the salad break. And typically, towards the festive season, we tend to see increase in food prices. But then the problem is we have lower disposable income and a low purchasing power for most consumers. So, but then the question is, will consumers actually purchase more as opposed to this time last year and previous years? Prices will definitely increase, but then I don't think the consumption, or at least the capacity at which consumers will purchase this year, would actually be low compared to last year.
Now, the FMCGs is said to be contemplating to increase prices. I remember in one of your reports earlier, you had indicated that most businesses, particularly those that import, have already adjusted prices in response to Naira depreciation. Now, why would they want to increase prices again, even when there is consumer resistance, as you've just said?
So I know previously when we spoke about manufacturers and consumers, we always say that consumers will tend to bear the cost. But however, if you realize the exchange rate has been depreciating from the beginning of the year till now. So the parallel market is about 420 and the interbank market is about 313. So manufacturers cannot continue to carry this burden on themselves. They have to somewhat pass this on to consumers. And if you buy, there's some commodities that you purchase, and you tend to see that the volume or the quantity has reduced. The prices may still remain the same, but the packaging and the quantity has reduced. So most companies are finding efficient ways to somewhat cut cost, but still, put those prices out without necessarily affecting consumers, while most other manufacturers are increasing prices. I'm not surprised because they still have the issue of forex shortages, and most manufacturers complain about waiting for about 3 weeks to about a month to access dollar, so they have to go to alternative markets, which is the black market, which is extremely high. So if you tend to, purchase most of your raw materials, equipment, for finished products, you have to definitely increase prices. So I expect most, if manufacturers are already complaining about this, I expect most prices to increase going forward.
Now, for some time now, we've seen some kind of appreciation on the Naira, both on the interbank and parallel market. What could be responsible for this?
Well, it's basically due to, I'd say, positive sentiment. So there has been the news that the 8 banks that have been banned have been reinstated back into participating in forex transactions. So that's good news. And as well, the CBN has said that they're going to license additional 11 international monetary transfer operators back into the system to somewhat address FX shortages. So that is the reason why we are seeing some sort of appreciation in the interbank and parallel market. However, is this going to be sustained? That's the question, because the fundamentals are still relatively weak and we don't have as much influx of FX into the financial market.
Yeah. Now, isn't it an irony that while the Naira is said to be appreciating, particularly on the interbank market, consumer goods prices are on the increase?
Well, like I said earlier, despite the fact that they've introduced the floating exchange rate as sometime in June, the issue of forex shortages still persists. So most manufacturers, most producers, they can't actually access forex. So that, there's some sort of premium now because you have to access forex at the interbank market due to long lists of waiting to access the forex. So that is already feeding into consumer good prices. So the ones that kind of access forex at the interbank market may not necessarily increase prices as to compared to those that access forex at the parallel market. So we expect this trend to continue until there's some sort of stabilization or some sort of convergence between the interbank and the parallel market.
Now, the share price of the consumer goods companies listed on the Nigerian Stock Exchange is said to be depreciating. Why is this so? Is it still all about the FX issues?
Well, it's just basically about the general economic trend. So we know that the last time they increased interest rates. So what we see now is a lot of investors are flooding into their fixed income assets because of higher yields and guaranteed returns. And again, we have to attribute the fact that the last economic data that was released were very bearish. So that's sending some sort of negative signal into the equities market. So we saw a contraction in GDP, we saw inflation rate going up, we saw unemployment rate increasing, PMI going down. So that's some sort of, that's a bearish data, and it's not showing any improvement in the economy. So we have most investors moving into an attractive environment where they can get higher yields for the money that they're trying to conserve, and guaranteed returns as to how risky the equity market is.
Now, in all of this, what is the outlook for domestic consumer goods prices?
I expect domestic consumer good prices to carry on, especially those that have some sort of import content in them. However, this is the harvest season, so we expect more commodities that are produced locally. We expect to see harvest coming up, so that will somewhat taper down the hike in prices. For example, rice, tomato prices have actually crashed. So depends. It depends on the food basket. So some may actually continue to go up, especially if it has to do with exchange rates. But the ones that we can source locally would see some sort of stability in those prices.
All right, thank you very much for your time and those updates there, Ada. Ada El-Kabir, Senior Investment Officer at Financial Derivatives Company here in Lagos. Now let's cross over to FMDQ Interbank Market currency to see how the currency is trading for today. And I'm being joined by Collins Akinemehin, FX dealer with FSDH Merchant Bank. Good afternoon, Collins.
Good afternoon.
So tell me, how is the Naira doing today?
Well, today the Naira has remained stable around 306 levels. The CBN, as we speak, is currently intervening in the market. But what is happening in the place is that overall there's been general illiquidity at the market.
Now, why is it?
CBN,
yeah, go ahead.
Okay, so on average, you see CBN supply about $1.5 million per day, but CBN is due to settle $1.5 billion worth of forwards on the 20th of this month. This was part of what was sold at the beginning of the new FX policy on June 20th. In the market, we've seen some significant capital inflow of about $270 million. This was seen last week, and this helps to stabilize the exchange rate over time to some extent. There was also a report that was released by the MBS recently to the effect that there was a significant drop in capital inflow in the second quarter of the year. So we saw about $600 million compared to $2.6 billion in the corresponding period of 2015. That was the lowest level of capital imported into the country on record, while that was also the largest year-on-year decrease. Hopefully, in view of the new FX flexibility policy that was introduced late in June, the third quarter figures might look much better.
Okay, we hope so. We hope to see that, Collins. But if you can answer this quickly, I'm just wondering why retail buyers who would probably want like $1,000 to $5,000 cannot access the interbank market for their foreign exchange.
Well, it still boils down to the supply issue that we mentioned earlier. CBN had recently issued a circular to banks emphasizing the need for banks to ensure that they supply to manufacturing sector. So 60% of all FX sourced by banks are supposed to be given to the manufacturing sector. So the remaining 40% for the invisible guys.
All right, thank you very much, Collins, for that update.